First one is Expi, and you know I talked about Expi and why I like it. Again, they recently just got a price target increase by Davidson, $67 a share from 26.50, which is a big increase. Okay, which is a big increase. Now I do wanna kind of talk about Expi and why the earnings was a little bit of a miss, but I want to take you guys to the EPS. Okay, I want to show you guys the growth that this company has, and of course, this is also from IBD. It's a real estate development, blah 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 company, whatever you name it. Composite rating of 96, ranked number 1 among the groups. Okay, so very high ranked. All right, number 1. I mean, obviously the biggest. Now they have an EPS change from last quarter of 400%. Massive. Okay, massive 400% growth. Okay, they do have 4% debt, but I don't think it's a big deal. I think they can easily take over that. And they have sales of 122% growth. I love it. I love this. Again, another growth stock that I really like. They recently did a forward split, as I talked about this in my other video. They recently did a forward split where they, obviously before the split, they were actually going crazy and running to $166. When a company does a forward split, they basically reduce the price and increase the number of shares float that they have. Basically, the shares, what is a float? A float is the number of shares you and me, us traders, can trade on a company in a single day back and forth. Okay, that is what a float is. And Expi increased their float, right, while decreasing their price of the stock. Okay, it is the opposite of a reverse split where you increase the price but decrease the float. You'll see penny stocks do reverse splits, but a good company tends to do forward splits. We had Apple do a forward split. It was a 1-to-4 forward split, and we had Tesla do a 1-to-5 forward split. So forward splits are good because it makes the company's price cheaper, making it seem like it's cheaper now, and more people get an opportunity to get in on the company. Okay, there's more shares available, so they can get in on the company at a much cheaper price. And when the company runs right back up, which we saw with the Tesla's case, obviously a lot of profit can be made. So for me, this is a company that I think by the end of this year is going to be somewhere around 120. It's going to be having a hard time getting over $100, but I do think that it's going to go to $100. And I also think that by the end of this year, it's going to be 120. That is the price target that I'm giving Expi. Definite great growth, great sales. I do recommend going in depth about this one a little bit. Some of you might not like this one. I don't know if you will. At the end of the day, it is up to you if you guys want to, basically trade this company. It is a United States company, so you're safe on that side. So definitely love the chart as well. Look at the MACD reversing and so on and so forth. These are growth stocks that have been beaten down with the market correction recently, and you guys can actually get in on a pretty cheap level. So again, another growth stocks that I really like. Okay.